Morning everybody, it's Chris here from Serene Education with the 4 majors and notes update for the 30th of August 2011. Hi guys, it's going to be looking at the 4 majors on the daily time frame. Let's have a look here. Okay, so what we've seen recently is this particular pair breaching a very strong resistance level recently, this consolidation band here. Oh, excuse me. You notice it's quite a significant consolidation band. If I can just move it along, you can see this tight squeeze here for over 2 weeks. We saw price failing to make any headway and consolidating on this downtrend, and then we saw subsequently on Friday this massive up candle breaching the whole lot and clearing it, and then yesterday's trading range spinning top making its way higher, even though we had a slight pullback in the market during the course of the day, closing slightly higher. Price was testing the previous swing in this case, this little heads up here. However, we are in the same area at 14,500, testing the previous high to that. This Harami spinning top and this evening star formation, and ideally what we want to do now is see a break and breach above that. So 14,500, break and close above that. You can see the small tiny the tight range on this as price has been moving higher because of these two areas. Psychologically traders will be taken into consideration, but once we break above that 14,500, then it's clear out to 14,700 and ultimately way back up here to the 14,800 14,9500 mark that we saw in early or late April of this year. So the clear signs are there that we're getting slightly higher movements. The swing highs are higher, which is great, and the CTC in this case has been pretty much blue across the board. Part of this consolidation, we had a lot of indecision over the past month or so. This whole August has been very, very indecisive. We have had upside movement, but a lot of the time we've actually been consolidating in a range. So if you're trading long term, dailies in particular, you would have not really seen any significant growth in your portfolio. However, in an intraday time frame, you might have been able to scalp a lot of pips along the way in this very volatile setup. But to mention now, what we've done is we've seen price actually breaking and trading higher. Then the squeeze pattern to the downside, which is a good sign because overall we are in an uptrend in a consolidation. We've just breached the consolidation mark. You can see the swing, this massive consolidation between the 1400 where we saw a lot of support and this downtrend here, and we are seeing price forming higher swings, which in the bigger picture is a major high. And we saw what we're seeing just recently over the past 3 months or so is this consolidation in this uptrend. So the longer we went along here, there's more possibility of a breach to the upside as long as it's trading above the institutional moving average. And you can see in more detail in the small time frame we're trading above all the moving averages, and the CTC is one extended in our favor. So this is still looking positive for further upside movement. Ideally we want to trade and break higher than 1455. Once we're in that clear air, then we're looking at real pushes higher to the ultimate goal here at 14,9500. So when we move into the intraday charts, you can see that on a 30-minute time frame we have this intraday trend line, and as I mentioned, if the institution moving averages below us, then we're still trading positive. CTC is well extended in our favor. We have a lot of consolidation and indecision with all the blue and reds here at the moment, and you can see just on the clear mark we have a clear resistance level going into this morning's trading session on the open of the European session. So you can see price is now broken above it. We want to see price trading and closing higher than this level, so above the 14,5250 mark, and if we get that, then obviously we're going to be looking for, as I mentioned before, a breach above 14,500 before we see further extensions. We don't want to be faking to trades, which has happened here. So ideally what we want to do is wait and bide our time and wait for a noticeable breach above the 14,500 mark. When that does come, then we're in cleaner air, and we should be looking for a potential pullback and then a continuation to the upside. Moving on to sterling against US dollar. Here again you can see the pullback, the massive pullback that we had breaching the 16,400 mark, which happened to be a very strong support and resistance level in the past. You can see noticeably a lot of hesitation here through the latter part of May and June, and then the latter part of July and the early parts of August we had a massive resistance level here, almost a triangular. You can see this triangular break there before we saw continuation lower. So then lower bounce. If I zoom out, you'll see that 1600 resistance, resistance, support, resistance, resistance, support, 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 support. So through the whole of 1600, noticeable support area and resistance for this pair over a large number of months, and you can see the swings noticeably. That would mean your initial one. However, you're looking at this now as your overall trend. You can see price action bouncing, fell through but failed to materialize any further. Bounce, bounce, and then the previous this latest swing has bounced higher. So that would be our smaller time frame trend direction. And you could see that ultimately, if you look at the extension from here to here, price reverted, came all the way right back to the 61.8 fib before we saw a reattempt higher. Now this hammer, you could call it, and it's now heading its way back up to 16,4,500. As I mentioned in yesterday's blog, ideally we want to see price trading well above that or above that in order to see any further growth in this. As long as it's still trading below this, it's still classified as resistance level, and we should still looking for possible downturn in the market. We don't want to be trading in the direction that we think it's going to trade. We want to be trading with the big boys. So the big money has to be giving us an idea, and ideally we want to see us trading on this side of it. As long as I get a nice daily candle breaking and closing here, then all I'm looking for is literally a slight consolidation range above here to give me an idea that we're going to see continuation. Notice we've had this upside movement. However, the trading range, even though it was long, is still very indecisive. So this is a spinning top, and look at last night's trading range, very indecisive. Small trading range, not really much happened over the Asian market session going into this European session open. And as long as we're trading to the end, and this is happening as we head towards the 16,4,500, which happens to be that strong support and resistance in the past. So ideally we want to see price breaking above 16,4,500 with a bit of gutso, a nice bullish engulfing, something like that, where the price range is really from wick to wick, really engulfing to give us that indication that yes, they have been decisive in their movement, and we're going to see an outcome on that. Because the moment we get that, then everybody's just going to jump on board, and price is going to rally even higher. So to start with, 16,4,500 has to be breached. Now if we move into our smaller time frames, you can see, for example, if we put that in 16,4,500, noticeable resistance in the past and a bit of support here when price was really moving higher. However, that failed to materialize, and we've got this pattern forming here, and then price breached, and then we saw a bounce. Now this bounce here could be a corrective bounce in a negative trend. We always see this breakout, pullback, continuation is possibly a likely outcome on this pair. Not to say it's going to happen, but if you just took an extension from where price rallied to the downside, a fib retracement figure, you can see that price is testing the 61.8% fib area as we speak, and it needs to obviously close higher than that. You can see the shooting star in the last 4 hours depicting a bit of exhaustion coming into the price as we head towards the 16,4,500 mark. It has to trade above 16,4,500 in my eyes. Failure to do so would obviously just see price consolidating under this area, the resistance area, for it to fall backwards again. And if you look at the direction of the swings, as I mentioned, price dictates that. You can see where this trend, this intermediate trend line, is likely to be. So very, very important. Hourly chart, you can see the institution moving average above us, floating roughly around the 1645, 164400 mark. So there's a lot of resistance above it, and it needs to do a lot in order to encourage price to be trading above that area. So don't be looking to go trade any higher until such time as you get a definite true break above 1645, and otherwise you'll be trading against the trend. Next up is the US dollar Swiss franc. Let's have a look here. US dollar hedging higher against the Swiss franc. And I mentioned last week we need to see a breach above the 80 mark, which happened to be a strong support and resistance level recently, and we should see price continue to gain strength, and the CTC should start seeing blue candles. And what happens is we get to see that. We had Monday, Friday is bang up against after the outcome at Jackson Hole. So the US dollar rally, and the Swiss government still keeping a heads up on their monetary outlay for the Swiss franc against the US dollar to try and stem this downgrade and the US dollar even further, because it was trading at one point trading at an all-time low against it at 72.7200, and now we've seen price rally in the past couple of weeks, then sitting and consolidating under the 80 before we saw a punch higher. Now trading above the 50 period moving average, if you look on the daily time frame, has been acting as a serious resistance level or ceiling level for this pair. So psychologically this is a major breakthrough for this pair, and we should see ultimately 8300 being the next target before we could see a bit of consolidation between. There's definitely a very strong consolidation band between the 83 and 86. If we can get through all that, then ultimately we can be testing the 8900 mark, which happens to be a price support and resistance level way back here, and there's some clean air again. But ultimately looking good. Let's have a look at the weekly setup. Look at that. This over here, exhaustion candle, a hammer. It's hammering out a bottom, and sure enough we've seen price really on that. It's just been steadily been going higher, and now we've crossed over this major barrier here to start with, which is fantastic. And ultimately we should be looking, if price continue, if we can break above the 8300, then we should be definitely looking for further extensions higher. CTC on the weekly, if you're trading on weekly charts, is still negative. However, you notice this week we have our first indication of possible bullishness. Really keeping in this level is the blue arrow. So if price can rally above 83, then we might get those blue bars or candles before we start seeing the CTC showing a bit of change in color. But you'll notice for a long period of time this pair has been trading negative, and now we've seen the first parts of this the Swiss government really is trying to stem this downgrade, and we've seen price revert to the upside. If I do a projection on the fib, for example, so we take the low where we saw the price change, the consolidation, so we take the high of the consolidation to the low of the consolidation, here 78, and you'll notice that price is now trading above the 38.2 fib, but exhaustion creeping in. However, the momentum is still posting higher. It's still half a candle and we're still moving higher. Ultimately, let's test the 50 and pull back. If we can get above 50, then our next target would be 61.8. Next target would be the 86.50, and ultimately the 8900, which take us to the institutional moving average, would be our clear goal. Trading above the institutional moving average would depict that we are very bullish on this pair, and we should be looking ultimately long-term price still trading higher. We have a swing here depicting, so as long as we stay on this side, if price stays on this side of the trend, then we should still be seeing possible consolidation before we see price trading high. Last pair of the day is US dollar against Japanese yen. Let's have a look here. Unlike its counterpart, the US dollar Swiss franc, we've seen the US dollar crumble against the Japanese yen in as many days. So all that work done over the past couple of weeks with this consolidation band have seen it come to nothing, null and void, as price has consolidated in this band along the 76.50 mark. Japanese markets tried to intervene, that didn't stack up. Then we had a full 2 weeks of indecision, spinning tops, dojis, all along this area here, and then we saw a breach leading up to the Jackson Hole meetings, and then that came to nothing, and we saw this bearish engulfing. Ideally we want to see price trading well below the 76.50, but it's found a bit of support again, so it's back in this consolidation range, and I mentioned we do need to see a breach on either side of this. So trading above 77 would indicate upside movement, trading below 76.50 would indicate further bearishness. Overall, the CTC is telling us we should be looking for further shorting opportunities, and once we get the red arrow and the bearish close below, then our CTC strategy for the daily would look very promising. Intraday, let's have a look here. 76.50. There we go. All this indecision, just consolidating over a couple of weeks. pretty much wasted time, not worth anything at all. And you can see this consolidation band here quite clearly once I put this box pattern in. There we go. So indecisive along, and then we had this breach, but didn't stack up. We saw a shooting star exhaustion candle, which just touched the institution moving average before we saw price reverting and forming an evening star formation before we saw price reverting to the downside and back into this consolidation box. Now, as I mentioned, we need to see a bullish engulfing to see any further extensions higher. CTC is not giving us that because it's still indecisive. We have the first part of our strategy on a 4-hour coming to fruition, but we don't have the CTC on the other side matching that. So until that happens, we're not going to be doing anything. Here, same thing. It's telling us bearish on the other side, but we don't have a sell and we don't have red candle. So ideally, it's only going to really come to fruition if we see a break below 76.40, 30 in particular, or well above the $77 mark. We're going to see here. So for now, just sit on your hands. Nothing's trading for the US dollar Japanese yen. The inside trading inside here is just too shallow. You're not going to get, and you don't want to be trading noise. It's pointless. It's not what you call trading. You're just wasting your time and not getting really much bang for buck. So I'm not going to leave US dollar Japanese yen until we actually see a definite close either side. So that's it for today. Hope you have a fantastic trading day. Just be aware if there's any news announcements out today, and factor that into your trading, please. Make sure you follow it up with great money management rules if you are using the CTC strategy. Otherwise, just bide your time. Here again, US dollar Japanese yen is a good example of that. Rather wait for a nice bullish engulfing support breakout on either side before we get into the trade. You don't want to be faked into trades. Look at this. Rather bide your time and then trade the good money. Trade the money when it comes. We're waiting for the market to give us its hand. When it shows its hand, then we're going to trade it. Take care, all the best, and trade serenely.